After an insurer pays a claim, the story may not be over. If another party caused the loss, the insurer may try to recover money from that party. That process is called subrogation. Subrogation is the process where an insurer pays a claim and then seeks recovery from the party responsible for the loss. The customer may feel the claim is finished after payment, but the insurer may still be working behind the scenes to recover money. Imagine your car insurer pays to repair your vehicle after another driver caused the crash. After paying you or the repair shop, your insurer may pursue the at-fault driver or their insurer. The goal is to put the cost back where responsibility belongs. Claim payment first matters because it changes what looks reasonable in this specific setting. In Subrogation in Insurance Explained, the person may feel they are reacting freely, while claim payment first and responsible third party have already narrowed the path. The common misunderstanding is thinking the claim ends when the insurer pays. For the customer, the repair may feel finished. For the insurer, the next step may be recovering from the person, company, contractor, or insurer that caused the loss. Auto claims make the process easy to picture. Your insurer may pay for repairs first so you are not waiting. Then it may pursue the at-fault driver's insurer. If recovery succeeds, some policies or situations may allow deductible reimbursement. The responsible third party is central. Subrogation only makes sense when someone else may legally owe the money. Without that party, there is no recovery path. With that party, the insurer tries to shift the cost back where it belongs. Early attention protects flexibility. Late attention may still help, but it often comes with extra cost, embarrassment, or negotiation. Policyholder cooperation matters. The insurer may need photos, reports, invoices, witness details, repair records, or settlement updates. If the customer signs a release too quickly, they may weaken the insurer's recovery rights. A home insurer pursuing a contractor after faulty work shows why the process can continue after the homeowner is paid. The insurer may believe the contractor caused the loss and should reimburse the claim. The homeowner may only see repairs, while the insurer follows the responsibility trail. Recovery rights often hides in the details of subrogation. In Subrogation in Insurance Explained, it may sit inside recovery rights, so the warning sign is easy to miss until the consequence is already moving. Subrogation can appear in health, auto, home, workers' compensation, and liability claims. The setting changes, but the core idea stays the same. One insurer paid first and then asked whether another party should ultimately carry the loss. Deductible reimbursement possibility deserves attention near the end of the chain. In Subrogation in Insurance Explained, it can decide whether the outcome becomes manageable or turns into the more difficult version of the problem. The emotional layer matters because people protect themselves while they make practical choices. The event is the clue, the mechanism is the explanation. Mixing them up leads to weak decisions. Subrogation can also explain why insurers ask detailed questions after a claim. They are not only deciding whether to pay, they may also be preserving the ability to recover from another party. The details that feel repetitive can matter later. The person using this idea should be able to point to one next step, not just repeat a definition. Sometimes subrogation involves another insurer rather than an individual. In a car crash, your insurer may deal with the other driver's insurer. In a property claim, a manufacturer, contractor, or building manager may become part of the recovery path. To use the idea, keep evidence and communicate before signing anything after a loss. A settlement with the other party may look convenient, but it can create trouble if it damages the insurer's recovery rights. The final lesson is practical. Name the force, check the detail, and choose the next move with more evidence. The customer's role is usually not to run the recovery process. The role is to avoid damaging it. That means keeping evidence, forwarding letters, answering questions, and checking with the insurer before signing broad releases. For subrogation, the strongest protection is preparation before pressure rises. Handling subrogation early can prevent the messier version later, especially when home insurer pursuing contractor after faulty work is already becoming possible. Subrogation is common in auto claims, but it can appear in health, property, workers' compensation, and liability situations too. The common thread is simple. One insurer pays now, then asks whether someone else should reimburse the loss. Evidence matters. Photos, reports, invoices, witness information, and repair records can all help establish who caused the loss. Losing those details can make recovery harder even when responsibility seems obvious. In Subrogation in Insurance Explained, this extra check matters because car insurer paying repairs then pursuing at fault driver can look simple until claim payment first and responsible third party are both included. The concept is useful when it turns confusion into a practical next step that can be taken before the problem grows. From the customer's point of view, the key is communication. If another party contacts you after a claim, or if you receive settlement paperwork, the insurer should know before you sign anything that could affect recovery rights. Subrogation can also reduce unfairness inside the insurance pool. If the responsible party pays back the loss, the cost does not stay entirely with the insurer and its customers. That recovery can matter even when the policyholder never sees the whole process. If recovery succeeds, the policyholder may never see most of the process, but it can still influence the claim record. That is why answering accurately and keeping documents is part of protecting the claim. The practical value is strongest when the idea helps someone act before home insurer pursuing contractor after faulty work becomes a more expensive or emotionally loaded problem. Subrogation often begins after the insurer has already helped its customer. For example, your car insurer may pay to repair your vehicle, then pursue the driver who caused the crash. The insurer is trying to recover money from the party that should have paid in the first place. This process can affect the deductible. If the insurer successfully recovers money, the policyholder may receive some or all of the deductible back, depending on the policy and the recovery. That is why subrogation can matter even after the repair seems finished. Policyholders usually have cooperation duties. They may need to provide documents, avoid signing away recovery rights, attend discussions, or tell the insurer about settlements. If someone settles too quickly with the responsible party, they may accidentally interfere with the insurer's recovery rights. Subrogation can feel strange because the customer may think the claim is finished once the insurer pays. Behind the scenes, the insurer is deciding whether another person, company, or insurer should ultimately bear the cost. Subrogation can feel invisible because the customer may not see every letter exchanged between insurers, lawyers, and responsible parties. But the process can still affect deductibles, claim files, and future disputes. That is why cooperation clauses matter. The insurer needs the customer not to accidentally damage the recovery path. Subrogation is not about punishing the customer. It is about placing the cost back on the responsible party when possible. That helps insurers control claim costs, which can affect pricing for the wider pool of policyholders over time. The policyholder should be careful with releases and side agreements. Signing away rights after a loss can interfere with the insurer's ability to recover, and that can create problems under the policy.